The dream of getting rich quickly is everywhere, from ads promising double-digit returns in months to social media influencers flaunting portfolio growth achieved in days. Everyone seems to be chasing the next hot stock, the next crypto surge, or the next so-called secret that claims to deliver overnight wealth. But here is the truth, rarely spoken aloud. Real, lasting wealth is not built in weeks or months, but over years of quiet, consistent effort. One of the most powerful tools to achieve that kind of wealth is hiding in plain sight. Through the simple, yet effective, systematic investment plan, commonly known as SIP. SIP works on a deceptively simple principle, where you invest a fixed amount every month into a mutual fund or long-term investment. There is no need to time the market, no frantic chart analysis, and no speculative gambling on trends. Instead, SIP rely on steady discipline, allowing millions of investors to quietly build wealth that rivals high-risk strategies. The real secret behind SIP success lies not in luck, but in time, consistency, and the power of compounding. Compounding is often described as the engine of wealth creation, famously referred to as the eighth wonder of the world. When small amounts are invested regularly, returns begin earning returns, creating exponential growth over time. A modest investment today can transform into a substantial sum simply by remaining invested long enough. SIP automate this process, removing emotional decision-making and letting time handle the heavy lifting. Rather than predicting market movements, investors benefit from consistency and patience. But compounding alone is not the full story. SIP also instill one of the most underrated yet critical investing traits: discipline. Most beginner investors panic during market volatility, selling during downturns and buying only when prices peak. SIP enforces a mindset shift by requiring the same monthly investment regardless of market conditions. When markets fall, the investment buys more units, and when markets rise, those units increase in value. Over time, this unemotional approach smooths volatility and prevents costly, impulsive decisions. Another subtle but powerful benefit is rupee cost averaging. By investing consistently, SIP investors automatically buy more when prices are low and fewer when prices are high. This lowers the average cost per unit over time and improves long-term returns. Market timing, which even professionals struggle with, becomes irrelevant. SIP also offer psychological ease that many investors underestimate. Once automated, investments continue quietly in the background while life moves on. There is less stress, fewer emotional reactions, and minimal obsession over daily market movements. This is why many SIP investors are surprised years later by how much wealth they have accumulated. To understand the impact clearly, consider investing a fixed monthly amount over decades. What begins as a modest contribution grows dramatically as time extends. The longer the investment horizon, the faster compounding accelerates. The key factor is not the size of the initial investment, but the length of consistent participation. SIP also provide flexibility that is often overlooked. Investors can start small, pause contributions when necessary, and increase amounts as income grows. Unlike lump sum investing, SIP lowered the barrier to entry and remove timing pressure. They democratize investing by allowing anyone to participate regardless of income level. Tax efficiency adds another layer of advantage in many regions. Long-term mutual fund investments often receive favorable tax treatment. Over decades, tax savings significantly enhance overall returns. Behavioral mastery may be the most overlooked benefit of SIP. Most investing mistakes are driven by fear, greed, and impatience, rather than poor analysis. SIP create a structured habit that trains investors to ignore short-term noise. Over time, this mindset mirrors that of the world's most successful long-term investors. Many of the wealthiest individuals did not build fortunes through speculation. They invested consistently, held quality assets, and allowed time to work. SIP enable everyday investors to apply the same philosophy on a practical scale. The biggest psychological hurdle is accepting that results are not immediate. In the early years, growth appears slow and sometimes disappointing. Comparisons with speculative wins can test patience. However, slow and steady growth compounds into extraordinary results over time. Market volatility becomes insignificant when viewed through a multi-decade lens. Diversification is another built-in advantage of SIPs. Most SIP invest across sectors and hundreds of companies. This spreads risk naturally and reduces exposure to catastrophic losses. Rather than betting on a single winner, investors benefit from broad market participation. Inflation protection is equally important. Idle cash loses value every year due to rising costs. Equity-based SIP offer returns that historically outpace inflation. This ensures long-term purchasing power is preserved. SIP also builds strong financial habits beyond investing. Regular contributions encourage budgeting and long-term planning. They reinforce delayed gratification and patience. Imagine a young professional starting SIP early in their career. They remain consistent, ignore hype, and gradually increase contributions. By retirement, their portfolio becomes life-changing. This is the quiet reality behind sustainable wealth creation. It is not flashy, but it is reliable. Wealth built this way is predictable and far less stressful. The core lessons are simple yet powerful when followed consistently. Starting early gives time maximum leverage. Consistency compounds small efforts into massive outcomes. Avoiding hype protects long-term returns. Discipline shields investors from emotional mistakes. Diversification reduces unnecessary risk. Patience transforms ordinary investments into extraordinary wealth. True financial independence is not about validation or attention. It is about control, stability, and freedom. SIP offer that path quietly and reliably. The most important step is action. Automation removes excuses and hesitation. Small steps taken today create powerful results tomorrow. Wealth grows silently while life moves forward. Years later, the results speak louder than any shortcut. The real magic lies in consistency, patience, and time. Those who understand this stop chasing shortcuts and start building futures. Financial freedom begins with a single decision, repeated monthly. Start now, stay disciplined, and let compounding do what nothing else can. Like this video to support more deep dives, subscribe for long-form investing breakdowns, and share it with a friend or family member who's just starting their investment journey.